The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 26th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Right now it's just fine, 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. Inside that heading, just put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 14 points, 22,309. S&P is up 3. She's trading at 24.99. NASDAQ 100 up 19 points, 58.86 is the print there. Russell 2000 up 4 points. It has further to run to the upside. Semis are slightly green. We'll call them flat. The New York Stock Exchange down just a bit, but advanced decline line at a new all-time high. Advanced decline volume line at a new all-time high. There is no top, folks. There is no major top. And nothing has changed between last Tuesday and this Tuesday. It is great to be back with you. I could use a vacation from my vacation, as I was a hurricane chaser dealing with Hurricane Jose. In any event, you've got gold back $11, silver's down 27 cents. She's trading at 16.87. Leading the charge here to the upside, you've got Cinex Corp up $7, NVIDIA up 350. FactSet Research up nearly $8. Royal Caribbean Cruise Lines up 360 or 3%. YY Inc. up 9%. To the downside, it is Avon Science. Now, I take that back. Axovant. Where the heck was Avon coming from? Axovant Science down $17 or 71%. Yikes. Repligen Corp. This market's giving me, feed me some tough ones here. It's down 6.79 or 15%. Darden Restaurants. I can get that. That's the one. Red Lobster. That's a little red today in the market, down over 5%, down $4.61. So, where are we? What's changed between last Tuesday and this Tuesday since we were last together? It doesn't look like a whole heck of a lot. So I mentioned the New York Stock Exchange. Advanced decline line at new all-time highs. This is what it actually looks like, as soon as I can find it here. Here we go. So if we just simply take a look at its chart, you're going to basically see 4 different panels. Top panel is going to be price out here. So we can take a look at that. The panel right below that is the advanced decline line. You're going to see a printout on my screen if you watch us on TigerTV or Inside the Den. Right now reads out 416,967. Those numbers are going to be different based on whatever system you might be using to calculate the advanced decline line, because it's a summation of all the prior days' historical data out here. The most important thing is when you put this on your screen, you're going to notice that it's at a new all-time high. I am fairly certain last Tuesday when we looked at it, which was also a new all-time high, we stated with unequivocally, unequivocally, you can see how nothing has changed there, that this market is nowhere near an all-time high out here. There is no bear market that is going to form as we begin right now. Any pullback that occurs is a gift. It is a buy the dip pullback should one occur out here. That is the message of the advanced decline line information inside the New York Stock Exchange. And you know how everybody who makes a big deal about when it doesn't make a new all-time high, it is, and price is, it's like everything's coming to an end. But most of those people just seem to hide under a rock when it actually is making a new all-time high as it is. Underneath that, you've got the volume summation of the advanced decline data. There's no divergence here. This is making a new all-time high as well. Again, pullbacks can always occur. But is this during this unfavorable seasonal cycle, which we still are in even as of September 26th out here, which it certainly isn't working from the unfavorable standpoint out here. This market is extraordinarily bullish. Get that bear suit out. Put it to the dry. Send it off. Send it away. It's just not in place out here. Now, that's not the only thing that you and I have to take a look at. I get a few emails, some asking, hey, what did I think about the NDX 100? And hey, I love the NDX 100. And if we take a look at it, it has some interesting signals as well. Let's see if I can find them, or where did I put that out here as the email was sent off. Divergent patterns. So here, if we take a look at this, you know, this is one of your favorite charts as well, where we go ahead and we compare the equal weighted, the QQEW, to the Qs out here. So in the equal weighted, we've got, what, about 108 issues, I think, that make up the NASDAQ 100 right now, NASDAQ 108. Or 107, something along those lines out here. But what we love about taking a look at the equal weighted version, where each of those 108 issues get an equal weighting in here, is we like to look for divergent patterns. And actually what you have forming right now is a bullish divergence. You see, the weighted issues inside the Qs certainly have pulled the Qs lower out here. The swing point that I'm taking a look at is one that formed, and that's the bottom portion of my screen, by the way, September the 8th out here. That swing point was taken out a few days ago. That's the red diagonal line to the downside. But if you take a look at where we're at inside the equal weighted out here, it has not taken out that September 8th level. Sound like none to me. I don't know. I mean, in any event. And so you've got a bit of a bullish divergence out here. Now, if we took a look at the QQEW on its own, I don't have any kind of bullish reversal signal. It's just to pay attention to this type of divergence. So that question that was asked, I apologize, I didn't write the name down. It was so quick to jump into the seat. I just want you to pay attention to the last time we had a similar type of divergence. It takes you back into May 17, 2017. And you can see that in essence, that level was tested inside the Qs back on July the 3rd, back on July the 6th out here. And you had that what we'll call bullish divergence inside the equal weight for the Qs out here. So am I worried that the Qs are going to go ahead and tank this market? Well, I'm always worried that that's a possibility, but are we seeing it when we take a look at the QQEW? The answer there is no way, Jose out there, and I'm referring to that hurricane, and quite frankly, it was not no way, Jose. It was a problem. If we take a look at the RSP, you know how I like to talk about this one, because this is the Guggenheim S&P equal weight. You know where we're at right now today, don't you? Right? We're at a new all-time high. Folks, that is a bullish divergence. These markets, believe it or not, they still want to go higher, even in unfavorable seasonal cycle.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, we talk about the NDX and the equal weighted for the S&P 500. So as we were going off the air, the RSP, that's the equal weighted ETF for the S&P 500. It's a new all-time high today. That is a very bullish divergence. The S&P or the SPY is not at a new all-time high today. The equal weighted is telling you the actual direction of the markets out here. Says the markets will be back up. Whether we're going to see a bit of a more decline over the next couple of days or not, I don't know. It doesn't matter. It does matter. But those of you that are thrill seekers looking for the big old bear market to begin, hide under a rock. It's just not going to happen out here. Don't hide under a rock. Join the bullish party out here. Now, interestingly enough, speaking of the NDX 100, the most interesting stock chart for you and I to take a look at is really Apple. Because if we take a look at the Apple chart, that's what's on our screen right now, we'll see that the price oscillator, that's the bottom panel of our screen, got right down to the zero level yesterday. Let me see. Do I have this thing set? Oops, I didn't mean to do that. I meant to click this. I think I do, but let me just, I think I do. Let me just make sure here. One setting that I want to make sure is on properly. Okay, yeah, it is. So you can see we're really right at the zero line. Now, here's what you should expect and anticipate, because there was a question about, has the NQ bottomed? So to the extent that you believe that Apple will assist in driving the direction of the NQ out here, or what's going to occur next. And look, if we put up the QQQ charts, we're not going to see the exact same thing. So if we're using Apple as one of the leading indicator out here, what we should see occur over the course of the next couple of days is price and Stevie's red line catch up to each other. Now, the red line is at 157.03, price at 153.26. Somewhere in between there is where we ought to see price move and catch up. If price overtakes Stevie's red line, at least with regard to Apple, it says it's back to bullish, that it has completed an A to B equals CD to the downside, and it's ready to head higher. A test and rejection of Stevie's red line, well, that has a different meaning. That would be a bearish meaning, at least with regard to Apple. But what typically takes place in anything that we take a look at, on any time frame out here right now, we're looking at the daily time frame for apples. When you get to that zero level, you start to see a stalling of price and then a test of Stevie's red line. Again, 157.03. So this does suggest to you and I, Rhett, we ought to see a bit more bounce inside the step of the NQ. We'll come back and we'll take a look at that, but there's some other questions that came in. So let's go take a look at least one other question that came in. So let's get to that one first, and that is from Tim. And Tim wanted to take a look at, is this a good entry price for FNSR? So let's go take a look at FNSR. Let's do it on using a couple of different tools out here. The first is the daily, then the weekly, then the monthly chart out here where we can take a look at our TAS market profiles. Now, let's start with the daily out here, because you're looking at an entry. I don't know what tool you're using to help to identify that. I don't know what your time frame is, Tim, but here's what we know. We know that FNSR, that is Finisar Corp, made a recent low that was on the trading day of September 8th. And that low was made with volume of 14.4 million shares. You're trading back today with very light volume. So far, you're at 969,000 shares. Now, what you want to see, if this is a buy point, is a rejection of that swing point. So, Tim, that would be 21.25. Even yesterday's move lower into it was 3.2 million, again moving into 14. So this is likely to head a bit lower. The question becomes, is it really going to head a bit lower? And the reason that we ask that question is because of the daily market profile. This began, looks like, on September 11th. And what we can see out here is the center of the box is much closer to the bottom. This is a bullish structured profile. And this was a 20.66 might be the level of support. Now, what it doesn't tell us is whether there's going to be some type of intraday push down to test the low of the swing point from September 11th. That's 2016. Because it can, and then close right back above 2066. That could be your buy signal out here. You're trading with inside the swing point. So, Tim, I don't know what your horizon is. Is this a potential buy area? Now, let's not get too caught up into the tick out here. The answer is yeah. I mean, it's coming back with light volume. At least that's what the daily chart shows to you and I. Areas that you have to be concerned with, this could be just simply trading inside a range, the range of 2265 to, in essence, the 2066 out there. Getting above or closing above the top of that daily box, that would be a good signal for you. Now, that's the daily chart here. If we pull over the daily chart on my other set of tools, what you will notice is that yesterday was actually a TD sequential count, number 13. Now, in order for that to actually activate it, you can see prices trading below Stevie's red line. That's at about 21.15 right now. But in order for this TD sequential count to activate and give you a bullish signal, you need to see a close above the close 4 sessions earlier, and we do not have that. 4 sessions earlier, by the way, 1, 2, 3. I have to get my crosshair out here. Let me do that for you. We're looking at 1, 2, 3. So it's about 21.85 is where you would need to see price close above. So, you know, I don't know what your time frame is on this type of trade out here, but if it's short term, that's what you and I have been looking at, is short term. Let's switch over, Tim, and go take a look at, we'll call it the intermediate term. And from an intermediate term basis, the week that began September 4th, 32 million shares to the downside. You're trading inside it. This is only Tuesday, but about 4.2 million so far. Again, that was 32. So from a weekly perspective, seems kind of potentially light. However, let's look at the week of April 17th, 35 million shares. That 35 million shares was taken out with 33 million shares. So you don't really have a confirmed A to B equals CD to the downside. This equity, Finisar, broke out on a weekly basis the week that began September 5th in 2016. So it says that, this is pulled back. Really with, well, that volume to the upside was 22 million versus 32 million to the downside. Intermediate term doesn't look so hot out here. You don't have the type of volume scenario that you would like. Even though a swing point was taken out with lighter volume, you still don't like that trading session the week of August 28th. Wrong date. the week of September 4th, 2017. So the intermediate term time frame says, you need to be careful as we take a look at it. And in the monthly time frame out here, well, whoa, let me see here. On the monthly time frame, the breakout for the month of September in 2016, interestingly enough, 63 million shares. You're pulling back with more volume, 71 million shares as we speak right now. So short term, you want to play that range because of the bullish structure. I get it. And if you do that and you close above the daily, top of the box, then okay. Intermediate and long term right now, you're not getting the warm, fuzzy feel. So, Tim, I hope that helps you. Thanks so much for writing in. That was, again, ticker symbol FNSR. Now, back to the other question that came in, which was, how does the NQ Z7 look on the TAS figures? Was Monday's NDX 150-840 low a bottom? So let's come back. Let's try to answer those questions for our man Z in the den. Then for Duffy, we're going to go look at Buff, B-U-F-F. I want to hear from you as well. So, TFNN.com. Give us a call at 877-937-6666.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're going to go try to answer the question that came in earlier from Z inside the den out here with regard to, hey, was that a bottom that we saw inside of the NQ? And I believe what he was focused on, well, several things, but one of the things that he was focused on was just simply taking a look at the retracement level Let me see if I can get this to spread a little bit. The retracement level inside of the NQ, and if he was doing that, these are the swing points that I would have grabbed out here. Would have been down here from August 21st at the low, and the high out here. Come on, move up there to the high. Why don't you do it? I'm not sure why it's not grabbing the high. But it's not. And what you'll see here is a 0.618 retracement. Then about the 58.62 level. Mine didn't grab the exact top of that swing point, so we're just going to call or the bottom. So that is the general area, the 58.62 range. Was that the bottom? And it could be out here. If we just simply look for some market profile information, because I believe that's what you were asking for, back on that daily chart, you're below the bottom of the daily box, and so that is short-term or daily-wise bearish. Sliding over to the left a little bit, you'll see the 240-minute chart about 6 o'clock last evening formed a brand new box, bullish structure out here, which suggests a bounce up to as much as the 59.43 level. That being said, 59.32 is the top of the daily box out here, or the bottom of the daily box. So I'd have to say that is a potential game on. How will price get up there? Well, you'll know if you see price close about 59.12 inside the NQ. Both the 30-minute market profile is what we're really talking here. That is the top of a 30-minute, is the top of a 60-minute box out here. So if you get above that, then you should anticipate at least that there's more bounce. Was it a bottom out here? I don't know. Was there, price got down to, but price did get down to the point of control level on a weekly basis, which was 58.29. It didn't get completely down there because we saw price get down to low 58.42. But for our purposes of this chart, that was close enough. Where else, in fact, could we see the NQ bounce to, right? Well, on a daily basis, I'd be watching 59.65 out here. Was that the bottom, so to speak? And don't pay attention to the profiles on that. They're different than what we just looked at on a daily basis. I don't know. We've got that. I think how you answered the question yourself. And you answer the question yourself by identifying really the last three. I'm just going to show you the last two, both intermediate term tops and bottoms on a 30-minute basis. They both made that wonderful Stevie Wonder singing in the key of G, wave number 7, both to the upside as well as to the downside. Right now, what you know is you're only in wave number 5. So if we're going to see a 4-peat out here, then we ought to see what takes place at that next 7th wave move, and that should be to the upside. So again, in summary, just simply watch 59.12.50. You get above that, price is headed higher. Watch for that 7th wave. If that doesn't form a top, then price will continue heading higher. And your targets, again, 59.32. Now, one last thing here that I want to pay attention to. This is a daily chart here for the NASDAQ 100, because we can take a look at market breadth. And we did get a bearish crossover today, September 26th. This took place at midnight. So at midnight, we saw a bearish crossover, red line getting above the green line. It is one of the reasons why I hesitate out there to be able to say to you, yeah, a bottom was formed. If this flips, and all it needs to flip. So what this means here is this means that price trading above on a daily basis, above the top of the box, that's going to be bullish because you're going to go ahead and get rid of the bearish side of any of those instruments out there, unless you're using some type of real leading indicator. That's not what the TAS market profiles are really all about. You have 33 issues trading above the top of the box. You have 35 issues trading below the box. So it's not going to take too much. And you'd have to go back and take a look at at each of those 35 issues below the box. We could do that. It would take us the rest of the show, so we're not going to do that out there. But that, in essence, is what you would be looking at. So I'd have to go with more neutral. Market breadth, though, is waning, and that's why we could see some more downside inside of the NQ. But watch those other levels. Watch those other levels. And that's the daily. If I give you the more intermediate term time frame, the weekly says, hey, no problem. Weekly just really confirms, market breadth-wise, what we just looked at inside the equal-weighted ETF versus the Qs themselves out here. If I look at a 4-hour chart out here, it's turned bullish. That took place as we were coming on the air. You saw a nice little crossover. If we take a look at the 1-hour time frame, it's at the kiss and show time because they are really touching. When I mean touching, 36 issues below the box, 38 above. Oh, just turned to 38 above the box, just as we were speaking out here. So just slightly to the bearish side, but the 60-minute time frame really needs to complete the time, which would be in the 25 more minutes from now. So hopefully that assists you out here. You'll see kind of diverging information from a profile standpoint. So let's go take a look at Duff. Wanted to take a look at Buff. And what was the question? I got to go figure out what was the question out here. Just your opinion. What's your opinion of Buff? BUFF is the ticker symbol. So I don't know. But let's go take a look at Buff. We'll both form an opinion on the fly. What better way to do it out here? So we'll just start with our 3 time frames for our TAS market profiles. Because this issue looks like this is a new IPO. This is a Blue Buffalo Petroleum Products. Back here, looks like it was August of 2015. Not enough data in order to calculate some monthly profiles. Not a big deal. Daily and weekly, they're above the top of their box out here, so it is certainly bullish with regard to what we'll call short and intermediate term time frame. Now we can see, or I can see, you can see, we all can see at least an A to B equals CD to the upside. That had a swing point on August 24th. 2 million shares was passed with 3.6 million shares. So in that case, Buff, we've got some price projections that we can go take a look at. There was hardly a retracement inside of this equity, but nonetheless there was. That retracement was about 21% out here. This would suggest to you and I a move up to 29.93, maybe 31.21. That's what the daily. How'd it do as it was moving over swing points on a weekly basis, even larger A to B equals CD. And that is this week. This is what we're talking about right now, right here, this week. The swing point is August 8th. That has 11.8 million shares. You're at 4 million shares. It's only Tuesday at 1:30. This looks like Buff could be setting up an A to B equals CD to the upside on the intermediate term time frame. Duff, that would look like this. Let's put our A point in here. That is February 8th, 2016. Well, let's do it if I can actually get this. Well, you got to hold down the right key. If you don't hold down the right key, it's not going to work out there. I love how technology works. There's your A point, your B point, the week of August 8th, 2016, and your C point looks like it was right down here, August 7th. This says longer-term, intermediate-term basis. You're looking at Blue Buffalo Petroleum Products headed up to 33.82, and I would say, nah, I doubt it. I would say more like 37.17. This is Steve Rhodes from TFNN. That one was for Buff. I'm going to do one for. Just give us a call, 877-927-6800. Steve at TFNN.com.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 15, S&P is up 4. Two questions that came in during that break. One from Jim. Jim wants to ask me my thoughts on gold, the U.S. dollar index. Yesterday, its movements, what my thoughts are on that. And Jim, and then Sylvia has a question on the ERY. So let's take a look at both of those questions. And Jim, my thoughts are, and they have been for a long period of time, that don't pay attention to the U.S. dollar index as it relates to gold. That'll just mess with your brain out there. That correlation, basically, throw it away. It's a terrible correlation as we speak right now. And let me show you what I mean about that. Let me see. I've got this set of charts in here because I always take a look at it. And in this case here, you've got the top portion of my chart. This is the current contract for gold equity, gold futures out here. Below that is the treasuries, 30-year treasury bond. Below that is the Japanese yen. That's a continuous contract we're looking at. And that is below that is the U.S. dollar index, all in a 10-minute time frame. The reason to put it on a 10-minute time frame is to just show you what it is you really should be looking at. So who really gives a rat's patootie if the U.S. dollar index is going up and so too is gold? That doesn't matter. That correlation just doesn't hold water. The correlation that does hold water is, hey, what's going on with the yen? And in this case here, my suggestion, just take a look at yen futures out here because they're going to be cruising in the same direction. Yen futures are getting stronger. So too will treasury bonds. So too will gold. When gold took off yesterday morning, okay, it was at the time frame of 1050. So 1050 to 1050 to 11 o'clock is where you saw the big move. Bottom portion of the chart is the U.S. dollar index. Did it really care? No. It was the yen. See, it was the yen futures. Just take a look at that bar. Take a look at the bar inside the 30-year treasury. Take a look at the bar inside of gold. So for those of you that are trading intraday basis, get your head totally wrapped around paying attention to what's going on with the yen, and it has nothing to do with regard to the U.S. dollar index. I'm sorry to disappoint you, but it just is what it is, and there's nothing like just simply looking at the facts. And the facts are inside of the chart, and you can just see that directional correlation and just simply how well it exists out there. So I hope that that assists you with regard to your trading. Sylvia says wants to look at an assessment of ERY. That is the bearish position of the energy sector. So it's very similar to the XLE. It's not exact, but it's close enough where we can take a look at both of those. And Sylvia wants to go ahead and enter the ERY. So let's try to assist Sylvia with that. And here is, oh, that was Buff. Where did I put the ERY? Well, We just put ERY out here and just simply start with market profiles. And what you're going to notice, Sylvia, daily, weekly, monthly, so we can get the monthly up here, you're going to see that price is below all of those profiles. So from a profile perspective, it's telling you not look at the bullish side of this market. And I can't give you a level of support other than to say go back to a prior swing point and watch that. So from an intermediate term time frame inside of the ERY, you're looking at all the way back into December 12th of 2016. And that's in the price area of 859 to 962. That's what it is communicating to you. We can do better than that, though. I know you and I, we can do better than that. And should this be the place that you're looking at for a trade? Well, if we take a look at the daily chart, we can see a little congestion zone where price is trading into. Look, if this is going to turn around to the upside, the energy sector, the XLE, is going to turn around to the downside. And you'd want to wait for that to happen. You'd want to wait for some type of confirming signal. Now, inside the ERY, as you and I take a look at it, I can't provide you with a Tom to Mark count. I can't generate a price relative strength divergence pattern. I can't come up with any of those patterns that help us to have market profiles that help us to identify some type of bottom out here. What I can't say is even if this were to turn around because, let's say, light sweet crude begins to pull back out here, you would need to see it close above 1193 inside of ERY. That's as we speak right now, in order for you to even consider going ahead and taking a long trade in it. Again, I can't control what takes place next, but what we can do is look at this daily chart and say, no, I don't see it. No pattern, no completion of an A to B equals CD, no nothing out here. In fact, if we go take a look at the XLE, we'll see just the opposite. The XLE is bullish as we speak right now. In fact, the XLE might even have a confirming A to B equals CD to the upside. Let's go take a look at that and see if is that even possible. Well, of course it's possible. Let's go take a look at it, see if it actually occurred out here. Because there was a swing point that I would use for my A to B equals CD. That was the shooting star on September 14th, 14 million shares, and his price got above it yesterday, 14.8 million shares. So you could be easily looking at an A to B equals CD to the upside inside of the energy sector. And you might want to be considering the long side of the trade. I'm not saying to take it, but you're looking at 70.60, 72.01, 73.81 out here inside of the energy sector. You got to go study ExxonMobil, Chevron, Schlumberger, the top 5 at least out here, just simply because of their weighting. Support on the energy sector, it'd be 66.67. Stevie's red line. There is nothing bearish about the XLE that I can see in taking a look at these charts out there. So, Sylvia, thanks for writing in. I hope that assists you. In fact, maybe it keeps you out of a trade that you were considering taking. Now, there was a question, back to the gold out here. So, because I just really covered only hey, what about the U.S. dollar index? Are we going to worry about that? No, that's for everybody else who doesn't really know that gold is influenced by the yen. So we'll let all those folks talk about the U.S. dollar index and the concern out there. You and I, we will not do that. But if we do take a look at Goldilocks, and probably important levels for you and I to take a look at, here are the gold. Here's the gold equity futures contract. Of course, this is Stevie's synthetic contract. And if we go take a look at areas of support or places where you want to watch, daily time frame, hit that level of support. Brand new box as we speak right now today. So you've got a lot of great information coming your way. Yen or not out here, if you're just simply going to go ahead and take a look at the TAS market profiles, you have a bullish structured box that formed today. This tells you and I that 1295.90, to be exact, should be a key level of support. If you see price close below that, boy, that is telling you the next leg down in gold has begun. Resistance is 13.1940. Bouncing up to that doesn't mean things have turned. Just means that you are in a bullish structure, and buyers should be able to push price up to that level. It's already occurred today. Didn't get up to the exact level. Remember, we're kind of like Jack Sparrow and his gang of friends out there. We use these as guidelines. 1303, by the way, is the did I get to? No, I didn't. What the heck am I? 1319 again is the top of the brand new daily box, and 1317 is the high for the day. I say watch 1295 like a hawk. Chances are what we see take place in gold over the course of the next couple of days is just a meandering inside of this daily box out here. I think that's what we're in store for. If you did see it close above 13.1940, then it's going to be game on back up to the highs out here. Do I think that's going to happen? That's not what the yen has communicated to you and I. Pay attention to the yen. This is Steve Rhodes with TFNN. We'll be back for that last segment. I'll see if there's any. Great to be back with you. Out of hurricane.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So a couple of things out here. You got the IWM. That is strong. Of course, the strongest thing that you and I are going to close out the session with is the transports out here. But if you take a look at the IWM Russell 2000, nice confirmed A to B equals CD to the upside when it took out the September 5th swing point. That had 21.9 million shares. It was taken out with 22.6 million shares. The 1-to-1 price projection, 145.36. Is it going to stop there? The answer is heavens to Betsy, no. It's going to make its way up to 147.20, maybe 149.54 out there. The Russell 2000 outperforming the Russell 1000. Small caps outperforming large caps. That's bullish, not bearish. Another message that is bullish, not bearish out here is just simply the Dow Transports. We're at a new all-time high as we speak right now inside the Dow Transports. This is a weekly chart that you and I are looking at just simply so that I can compress the data. But the July 10th, the week of July 10th, that high was 21,680. I'm sorry, I'm looking at the Dow. Was 97.63. You're at 97.80 right now. Does the Dow? I posed this question inside the den earlier. Does the Dow top when the transports are at new all-time highs out here? So, forget about if you want to just say, Steve-O, take that NYSE advanced decline line and just stick it up your patootie, whatever that might be out here. And you don't, because I know Mr. 666, who's short, is going to send me another email telling me I'm all wrong. We're just reading the charts out here. Historically, answer the question, has the Dow Jones Industrials ever started a bear market when the Dow transports are at a new all-time high? And the answer is no. So you got the Dow transports, brand new all-time high. I had just turned on Basil's show just before I began, and I thought Basil was saying something about the Dow going ahead and making one more push higher. Basil, I'm here to tell you, if you're still listening, that, in fact, that is going to happen. That is the message, at least of the Dow transports out here. So the Dow is going to go ahead, and it's going to find its way to get back up to those highs. Doesn't tell me when, but certainly as we take a look at this, it's a beautiful thing. Folks, stay tuned. Your favorite polar bear in mind, David White's up next. After that, Tom O'Brien, 3 to 5, Andy Heck from 5 to 6. I'll see you back on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.